Hello everyone, this is Xratios Investor. Please note that this video is for educational purpose, and please still do your own research. If you liked this video, please give me a thumbs up and hit the subscribe button. People, listen, if you don't like the stock when it's at the lowest point, why buy it when it's at the very top? Is it because you are following the hype? Is it because you listen to people? You only recently found out about the stock? Or the volatility attracts you? These are some questions you must think about and reevaluate, because I can guarantee you that is where most investors lose their money, because not knowing what you are investing in is the worst thing you could possibly do. I have put a lot of work and effort into this video, and I hope you can learn something out from this. First thing first, we need to understand the current situation, and what the earnings reports tell us about the marijuana stock's future outlook. Aurora Cannabis had a remarkable report, yet we still see a dip of 6.01% to $6.85. If we look at the overall U.S. stock market, there were huge sell-off in the overall industry, and unfortunately marijuana industry falls into victim as well. Also, like what I have initially feared, I am seeing a mixed picture of the earnings reports due to the fact that the hype did not live up to the expectation. However, part of me expected that because the post-legalization sales are not included into this earnings report. We have seen a lot of marijuana companies with good revenue and incredible future outlook, which is great, but unfortunately not good enough. For example, TLRY reported loss of 8 cents per share, beating analysts' expectation by 4 cents, with total revenue of $10 million, 85.8% sales increase over the last year. Cronos reported revenue of $2.84 million, a 187% increase, with 514 kilograms of cannabis sold, rise of 213%. Canopy Growth reported revenue of $17.61 million, increased of 33% in revenue. Analysts were expecting the company to report revenue of $45 million, but reported a loss of $1 a share on an adjusted basis. Aurora reported revenue of $22 million, 260% sales increase year-over-year, $10 million more than in the previous quarter, a spike of more than 28 times the previously reported figure. Active registered patients shot up 250% to 67,484 from the acquisitions of MedRelief and CaniMed. These stocks prove that numbers are great, but sadly not good enough as the fundamentals and valuations kick in. I believe that we will only be able to tell in the next few earnings reports. Like Cronos with nice percent increase of almost over 200%, but the evaluation is far too high. In other words, we need to see sales growth beyond 200% for $1 billion market cap to justify it. Similar case with TLRY, Canopy Growth, Aurora and so on. I am not going to go too far into the details, but I have to say that I am extremely pleased and impressed by Aurora's earnings. We are beginning to see the winners in the cannabis industry, and Aurora is the stock that remains as one of the top Canadian cannabis companies. Which is why I believe that only 3 things matter after seeing the earnings reports, especially if you are planning to hold or buy more marijuana stock. Number 1. The loss for these companies should only be temporary. A large part of it is from the total operating expenses that increased by an enormous 200% year-over-year. Aurora spent almost $30 million on sales and marketing for the legalization of recreational market, a number that was 700% more than its marketing budget just a year ago. These spending is important in order for companies to prepare for the recreational marijuana market in Canada. If Cronos and Aurora's big loss in this quarter was a warning sign to happen, investors would have a good reason to be concerned. But I reckon that the related net loss is part of the investment for brand building to generate a solid return in the future, and should only be temporary loss figure in the near term. Number 2. Building capacity. Aurora have earned $600,000 from the initial shipment on the last 2 weeks of September, producing 11,000 pounds of pot in 3 months. Aurora are expected to have annual capacity of 150,000 kilograms by the end of this year. If you think about the profitability next year, especially with their plan to ramp up their production to 500,000 by the middle of 2019, I am confident that we are going to see some scary numbers up there. So yes, I would say the increased spending will eventually be justified. Number 3. The cost to produce and average price per gram was down by a whopping 15% from the previous quarter. Aurora's cash cost for production of each gram of cannabis sold fell by nearly 23% year-over-year. These changes are due to the increased efficiency in production, and successful implementation of techniques. I believe we could likely see this numbers drop further, and allows these marijuana production companies to generate larger profit. With all that being said, I do need to remind you that we could still see more shares dilution coming in the future, as the marijuana companies will likely need to raise cash to further expand and further the development, because we are still in the early stage of the industry. I believe that branding and innovation will be the focus of 2019, and for that to happen, partnership and joint ventures will be the catalyst to it. Until then, you might want to look at other stocks. I am currently down by quite some percentage, but I for sure am not overly concerned and will continue to hold and average down my position where I see fit, because I think we might be seeing the bottom of the marijuana market soon. That's all I have for this video. As always, do note that speculation caused people to pay no attention to stock valuation consideration, so please exercise the stock with caution. Subscribe here for more stock videos, and leave a thumbs up if you liked this video. Comment down below and let me know what stock you would like me to talk about. Till next time.